Welcome to The Explainer. Today we're diving into a really fascinating story where a company's stock actually dropped right after they announced what looked like amazing news. It's one of those classic Wall Street puzzles, so let's get right into it.
So let's start with the big question. Why on earth would a stock drop on what seems like great news? This is the central puzzle behind the recent moves from IREN, a data center company that's been making some huge waves in both crypto and AI. It sounds kind of backwards, I know, but it actually happens more than you'd think.
So here's the setup. On one hand, you have IREN announcing this massive, potentially game-changing expansion into AI infrastructure. But on the other hand, the market's initial reaction? It punished the stock. Shares dropped about 5% in after-hours trading. So what is really going on here?
To really get why the stock dropped, we have to look at the part of the announcement that made investors a little nervous. And, well, it all comes down to how they plan on paying for all this incredible growth.
See, along with all that good news, IREN also announced plans to raise up to $6 billion. And they're going to do it by potentially selling brand new shares on the open market. This is what's called an at-the-market offering. And that right there leads to one of the market's biggest fears, stock dilution. Think of it like this. When new shares are created out of thin air, each existing share you own suddenly represents a slightly smaller slice of a company pie. And the fear of that happening is what caused that initial dip after the market closed.
But, that's only half the story. The other part, and you could argue it's the more important part, is where that $6 billion is actually going. This isn't just about raising cash for no reason, no. This is pure fuel for a massive, massive bet on AI.
So what are they buying? Well, IREN is buying 50,000 advanced GPUs directly from Nvidia. I mean, this is a huge move. It brings their total capacity up to 150,000 of these things, and it's a crystal clear signal that they are pivoting hard towards servicing this AI gold rush.
And the numbers they're talking about are just staggering. With this expansion, IREN is forecasting that its AI cloud business could generate over $3.7 billion in revenue every single year. And this isn't some move happening in a vacuum. It actually builds on other massive deals, like a multi-billion-dollar agreement to provide data centers for Microsoft. IREN is very clearly trying to position itself as a cornerstone of the entire AI ecosystem.
And this is exactly what retail investors on platforms like StockTwits picked up on right away. The whole feeling around the stock actually flipped from negative to positive because, as you can see, a lot of people were arguing that this kind of aggressive spending is exactly what you have to do to win in this space.
Okay, so we've got these two powerful opposing forces, right? You've got the short-term fear of dilution clashing with the long-term excitement for explosive growth. This brings us to a really helpful way of thinking about IREN's strategy, which we can call the high-wire act.
The high-wire act is basically when a company uses the momentum and the high price of its own stock as a kind of currency to pay for even faster expansion. You're literally converting stock market enthusiasm into hard assets, in this case, data centers and top-of-the-line GPUs. Now, when it works, it's absolutely brilliant. It's this upward spiral, a virtuous cycle. The stock goes up, you raise cheap cash, you buy more stuff, you announce more growth, and the stock goes up even more. But, and this is a big but, the danger is that this whole thing can run in reverse. It's incredibly sensitive, not just to the value of its assets, but also to whether the market is willing to keep funding the dream.
So the most important point here is that this strategy leaves very little room for error. I mean, if investors lose faith and that cheap capital dries up, or if the demand for AI infrastructure suddenly cools off, the pressure can build incredibly fast, and that can lead to a really nasty downward spiral.
So let's boil all this down to the key takeaways. What are the most important things to remember from this whole story? First, this story is a perfect example of that classic Wall Street battle between short-term fears, in this case dilution, and long-term hopes for growth. Second, IREN is pulling off a high-wire act, using its own stock as currency to fund a massive pivot into AI. It's a high-risk, high-reward play that really depends on them executing perfectly and the market staying enthusiastic. And finally, that retail investor reaction we saw just shows a strong belief that in this AI arms race, you really do have to spend big to win big.
Which, of course, leaves us with a critical question to think about as this all plays out. Is this aggressive spending a stroke of genius that's going to cement IREN as a leader for the next decade? Or is it a high-wire act with no safety net? I guess only time will tell.
And just a quick reminder, this explainer is for educational and informational purposes only. It should not be taken as financial advice. Please make sure you consult with a qualified professional before making any financial decisions.
If you enjoyed this breakdown and want to see more like it, it would be a huge help if you'd subscribe to our channel, Edgar and Ven, on YouTube. Thanks for watching.